with Pravin Rao, the CEO of Infosys and MD Ranganath, and began by asking where the next wave of growth will come from in the next few years.
This quarter three is seasonally weak quarter, so we should not be reading too much into the growth of each of the verticals. So going forward, looking into the future, we remain confident about BFSI space. So this quarter itself, despite the RBS headwind and the seasonal weakness, on a constant currency basis, it grew marginally to by 0.2%. Manufacturing is expected to bounce back, and within manufacturing, auto, we are seeing good traction. Aerospace is a little bit challenged. High tech was a challenge this quarter, but we expect it to bounce back next quarter. Retail will probably continue to be volatile. We can see ups and downs over the next few quarters. Utility is doing extremely well. It has done in the past. Energy will probably remain soft rest of the year. Then life sciences have done well. Telecom, after several quarters of growth, we saw some decline, but we expect it to bounce back. So net, I think barring maybe energy and some subsegments within some of the verticals, we do expect positive growth in the coming quarters.
Sure. Ranga, in terms of the margin expansion, just want to understand how this has happened, and also in terms of pushing your utilization up, what really are you working towards?
I think in this quarter, the operating margin expanded, the net margin expanded, operating cash flow was healthy. I think if you look at the margins, for example, the rupee depreciation gave us 30 basis points advantage that was offset by the cross currency. Then we had the higher leave utilization gave us certain advantages. That plus variable pay gave 130 basis points. Overall, I think then there are other factors like higher CSR, etc. Overall, 20 basis point expansion. The good thing is, if you look at the last 7 quarters, the utilization has been consistently higher than 80%. And 9 months of this quarter, this year, compared to 9 months of last year, the operating margin has been steady, despite the 1.7% present decline that we saw. I think overall we'll continue to focus on these levers that we have for margin expansion.
Sure. Also, in terms of the changes that might happen now with the H-1B visa regulation in the US, in terms of working out those costs, are there any conscious decision that is being made at this point in time?
So I think if you look at the proposals, there have been several proposals, and some of them are not even old new proposals. They are the old proposals. They have been under consideration. In what form, which proposal will be finally adopted, it's too uncertain at this stage. While that is there, at the same time, we continue to hire locally, and we are also kind of continue to focus on that. So to answer your question, at this point in time, there are multiple proposals, and most of them are old proposals, right, of various degrees. Some are positive, some are negative. So at this point in time, too early to say which one will be adopted in what form. Typically, all of them undergo amendments and things like that. So we're more closely monitoring.
Pravin, in terms of client spend, what really are you hearing at this point in time from your clients in the Europe and Americas?
I think it's historically we used to by now get a sense of what the budgets are, but this year, given some of the macro and uncertainties, clients are also in a wait and watch mode. So we'll get some sense in the coming quarter. But having said that, in the last couple of years, when we have seen a lot of volatility and macro kind of thing, in some sense, budget has lost its relevance because even when someone has budgets on a quarterly basis, they change the budgets based on the context and so on. So to that extent, the reliance on budget and which was historically very strong is no longer true. The only thing that is very certain is across the board, across industries, across geographies, everyone is focusing on cutting costs, improving their operational efficiency, and repurposing that cost saving into newer areas like digital analytics and so on. That is common across this one. But budget thing will probably vary.
Sure. One final question in terms of pricing pressure. Do you see that continuing going into the next quarters as well?
I mean, as we have said, in one part of the business and IT services, it's a continuous trend, and there's a clear expectation that you have to use technology, automation, and improve and drive more efficiencies and so on. So clients are definitely looking at cutting costs there and repurposing the spend, as I said earlier, into other areas. So given that environment, we continue to expect pressure on that part of the business, but we are hoping to counter as we have done through some of the traditional levers as well as through our investment in automation and so on.